China's introduction of a gold ATM in Shanghai is emblematic of a broader transformation in the global gold market, where tradition, technology, and economic forces converge. This innovation comes at a time of historic volatility and record-breaking gold prices, offering a timely lens through which to examine not only the mechanics and cultural impact of the gold ATM itself, but also the powerful macroeconomic and geopolitical currents that have driven gold's remarkable ascent over the past 6 months. The gold ATM, developed by China's Kinghood Group, is a vending machine-sized device that allows users to convert gold jewelry into cash quickly and transparently. Accepting items weighing over 3 grams and with a minimum purity of 50%, the machine analyzes, weighs, and melts the gold to verify its purity with high accuracy. The payout is calculated based on real-time prices from the Shanghai Gold Exchange, minus a small service fee, and funds are transferred directly to the user's bank account within 30 minutes. This process, monitored by staff for security, eliminates the paperwork and negotiation typically associated with traditional gold buyers, making gold selling more efficient and trustworthy. Public response to the gold ATM has been overwhelmingly positive. Long queues and fully booked appointments reflect its popularity, especially among women aged 50 to 70, who often bring family heirlooms to sell. Younger users are also increasingly drawn to the ATM, attracted by its transparency, speed, and the novelty of free, non-destructive purity testing. The machine's standardized procedures and live pricing address long-standing complaints about opaque valuations in traditional jewelry shops, fostering a sense of fairness and reliability. As one user remarked, the technology offers a level of standardization and transparency that even small price differences cannot offset. This surge in gold trading activity via the ATM is inseparable from gold's cultural significance in China, where the metal symbolizes prosperity, security, and good fortune. Traditionally, gold has been a favored gift and a store of wealth across generations. However, there is a notable generational shift underway. Buyers born after 1990 now represent more than half of China's gold market, with those aged 18 to 34 accounting for over a third of retail gold jewelry sales. The ATM thus stands at the intersection of tradition and modernity, democratizing access to gold trading and appealing to both older and younger generations. The timing of the gold ATM's debut coincides with an extraordinary period for gold prices. Over the last 6 months, gold has experienced a dramatic rally, repeatedly breaking all-time highs. In late October 2024, gold approached $2,800 per ounce, and by March 2025, it had surged past $3,000 for the first time ever. The upward momentum continued into April, with gold reaching a historic peak of $3,500 per ounce before retreating slightly to around $3,300 by late April 2025. Year to date, gold has risen over 26%, vastly outperforming most other asset classes. Several interconnected factors have fueled this extraordinary rally. First, global economic uncertainty has driven investors toward gold's safe haven appeal. The resurgence of aggressive U.S. trade policies, including sweeping tariffs on Chinese and European goods, has heightened fears of a prolonged trade war and supply chain disruptions. Each major policy announcement has triggered immediate gold price surges, as investors seek shelter from potential market dislocation and currency volatility. The dollar index, for example, has fluctuated within an unusually wide range, further enhancing gold's status as a stable store of value. Political instability has also played a significant role. With elections scheduled in 7 G20 nations in 2025 and ongoing tensions in global hotspots, the CBOE Volatility Index VIX has averaged well above its historical mean, reflecting heightened investor anxiety. These conditions have prompted institutional investors to increase their gold allocations, with central banks leading the charge. In 2024, central banks around the world purchased gold at a historic pace, with countries like China, India, Turkey, and Poland among the largest buyers. This sustained demand from central banks has sent a strong bullish signal to the market, reinforcing confidence in gold's long-term value. Macroeconomic indicators have further amplified gold's rally. Persistent inflation, though moderating from its post-pandemic peaks, remains above target in many economies, prompting investors to seek inflation hedges. Meanwhile, central banks in Europe and the UK have begun cutting rates, and the U.S. Federal Reserve has signaled an upcoming shift toward rate cuts. Lower interest rate expectations reduce the opportunity cost of holding gold, making it more attractive relative to yield-bearing assets. Additionally, recession fears have intensified as leading economic indicators, such as the Conference Board's Leading Economic Index and manufacturing PMIs, have signaled potential contraction in major economies. The yield curve inversion between 2-year and 10-year U.S. Treasuries has persisted for months, a classic harbinger of recession, further driving demand for gold as a defensive asset. Another crucial factor has been the changing dynamics of the gold market itself. Historically, gold prices were heavily influenced by futures market activity, with paper trading volumes often dwarfing physical supply. However, in recent months, there has been a notable reduction in futures market manipulation and a growing preference among institutional investors for physical delivery rather than cash settlement. This shift has tightened physical supply, with kilobars commanding significant premiums and physical gold becoming harder to acquire despite rising prices. The diminished capacity for artificial price suppression has allowed gold to find its natural value based on true supply and demand fundamentals. Despite these powerful tailwinds, gold's rally has not been without volatility. After peaking at $3,500 in late April, prices pulled back by nearly $200 as trade tensions appeared to ease and U.S. inflation showed signs of moderating. Statements from U.S. political leaders suggesting a pause in tariff escalation, as well as a softening stance on Federal Reserve independence, contributed to a temporary cooling in gold prices. Nevertheless, most analysts and major financial institutions remain bullish, with 2025 price targets ranging from $3,000 to $4,000 per ounce, and some forecasts reaching as high as $5,000. These dramatic price movements have had a direct impact on gold trading behavior in China. The surge in gold prices has prompted many individuals to liquidate their gold holdings at favorable rates, contributing to the gold ATM's popularity. The machine's transparent, real-time pricing and efficient process have disrupted traditional gold buying practices, drawing business away from small-scale buyers and jewelry shops that cannot match the ATM's terms or convenience. Kinghood Group has already installed machines in about 100 cities, signaling a broader transformation in how gold is traded and valued in China. The success of the gold ATM also reflects broader trends in financial automation and digitalization. By reducing the need for intermediaries and paperwork, the machine exemplifies the growing role of technology in streamlining financial transactions. Its adaptability supporting multiple currencies, languages, and regulatory requirements positions it for potential adoption in other major gold markets, such as India. Social media reactions have ranged from excitement over China's technological leadership to concerns about security and potential misuse, underscoring both the promise and challenges of this innovation. Nevertheless, several challenges remain. The convenience of automated gold trading raises questions about security for both users and the machines themselves. Rapid price fluctuations require robust systems for real-time pricing and risk management. Cultural adaptation may also be necessary for the ATM to succeed in other markets, depending on local attitudes toward gold, technology, and trust in automation. The introduction of the gold ATM in Shanghai is a landmark development at the intersection of tradition, technology, and global finance. Its rise is inseparable from the extraordinary surge in gold prices over the past 6 months, driven by economic uncertainty, geopolitical instability, central bank demand, and shifting market dynamics. By offering a fast, transparent, and automated way to convert gold into cash, the ATM meets the needs of a diverse and growing market while setting a precedent for the future of gold trading worldwide. As gold prices continue to respond to the evolving global landscape, China's gold ATM stands as a powerful symbol of innovation, where centuries-old cultural values meet the demands of a rapidly changing world.